look, my charts are still not, I still don't know how to draw lines and all that good stuff, but I'm going to add, well, this is my new Thinkorswim platform. It's horrible compared to what I'm used to from Schwab for 8 years. It's horrible, absolutely horrible. And then there it is. Let's add it to, okay. All right, so I'm going to go through the usual charts. I cannot draw lines still. I don't know how to draw lines. I'm sorry. But at least I can trade now, which is good. So I hope you guys all, you all can see. Let me go through the usual, topics. Wait a minute. Is this even working? I hope it is. Yeah, it's working. Okay, so this is my account. This is, it got migrated from Schwab to Thinkorswim. I absolutely despise it. I don't like it. But I'm gonna go to bigger charts and then go through, the usual stuff. Hold on one second. Okay, so let's make this large. I learned how to do that. Here's the, I hope you guys can see this, right? So this is the S&P 500. S&P 500. Here's, the swoon that I was talking to you guys about. I mean, look what happened, right? S&P 500 went from 560 to 510, almost hit the 200-day moving average. At least I have my moving averages, Bollinger Bands, volume, MACD, all that stuff that I used to have before. Hope you all can see this. And, we had that little bit of a carry trade situation, which I talked about last week. You guys go check that video out, how the Japanese interest rates and the carry trade between the US dollar and Japanese yen is affecting all this, or has affected supposedly. Yeah, so that's where we are. And what has happened is that after that swoon, right? I mean, that was pretty appreciable. There was what, 11% decline in about 2 weeks. And then in the next 2 weeks, we're right back to where we were, about 560. And that's and this is the triple Qs. Triple Qs are the NASDAQ 100. I mean, same thing almost, but NASDAQ 100 hasn't reached its all-time high yet. S&P 500 has. NASDAQ 500 had more of a precipitous drop. It went from about 500 to 425-ish. Even broke the 200-day, but it stayed above it. And then after that, we're right back to 480, which is, how things are in these days markets. Let's look at NVIDIA's earnings are coming out on the 28th. So NVIDIA, actually, I did trade. I made decent money on NVIDIA. I bought this options actually about 92, 93, but by the time 15 minutes went by that day, I sold it. If I hadn't sold it, I would have gone like 6x on it, but then you don't know, my bias was negative. So NVIDIA basically went from 136 to 92 in a matter of 2.5, 3 weeks. And then from 92, we're back to 130 almost, right? So the volatility is there for you guys to make money. This is Apple. Apple, same thing, right? Massive, drawdown from 235 to 195, and then right back to 225. This is Amazon. Amazon actually is the weakest out of the Mag 7, I think. I mean, it's just struggling, really. It's just for some reason. But Jeff Bezos sold at $200, $5 billion worth of stock. And, I mean, hey, Meta is the best out of the Mag 7. It's basically in all this, it just went sideways, and it's about to break out again on a long-term basis. If I was to buy any of the Mag 7, it would be Meta, Microsoft. Again, weaker. I mean, you guys can see the underperformance and outperformance, right? Compare Meta, this one, to Microsoft's charts, right? I mean, picture's worth 1,000 words. AMD had a swoon. And then, I mean, a lot of the stocks are not that highs yet, but indexes are back to their highs. Tesla, same thing. Had the crack. It came from about 270 range down to 180 range and then bounced to 220. For me, these are all dead cat bounces. But then now, all this damage that was done needs to be resolved somehow. How's that going to be resolved? Either by going sideways. These V bottoms don't hold. My experience, and my experience only. If anybody's got experience in these things of 30 years, you can email me, Sergio@sergioavedian.com. We can take the conversation over there. And then, even I don't even know how to, I did create a watch list, and here's my watch list. This is my watch list. I'll go through them by name. Affirm is one. Actually, one good thing I like about this is like when I click on it, it changes the chart on there. So I kind of like this chart. It's kind of going sideways. It's in a downtrend still, but then breaking above the 200-day, breaking above the 50-day. I dig it. AMD I showed, Amazon I showed. This is one that went nosebleed, absolute nosebleeds. There was a gentleman on Twitter. He was talking about this at like $2, $3, $4, $5 a share. I didn't really pay attention, and then I paid attention when it started. When it had a day of it went from 20 to 30, and then it hit 40, and I'm going like, shit. Where was I? But then it's AST Space Mobile. He's still very bullish on it. I think stock is in a nosebleed area. It needs to kind of digest all these gains, but you should pay attention to it. Avago is another one. This is what I like about actually Thinkorswim. I can click on it and then get it. Avago is one of Nancy Pelosi stocks. Look where it stopped, people. It stopped exactly at the 200-day average. I mean, these things I've been talking about to you guys. You should be reading the books. Those are where the support levels are, resistance levels are. Stock went from 175 to 130, and then what? Right back to 170. Alibaba has been one of my favorites. Actually, it's doing a lot better. So I've been talking about Alibaba for 2 months since I started doing the show in the 70s, mid 70s. We're up to 85. I have stock in Alibaba, stock, not options, long-term account. This is the Bitcoin. It even kept my downtrend line. Well, here it is. I guess I can draw lines, but I'll have to do that for next week. This is the Bitcoin double whammy ETF. BITX is the symbol. So if Bitcoin goes, 1%, this will go 2%. I trade this as opposed to the Bitcoin or MicroStrategy actually. So if Bitcoin does go to 100,000, this thing is going to be like $100 a share. So guys, pay attention to it. Here's one of my most favorite stocks. I've been talking about this for months with you guys, last 2 months. Kava. Again, you don't have to be a genius to figure these things out. The first time I ate a Kava was when the stock was about $30 last May, and I wasn't even doing the YouTube channel then. I ate it first time in California, and I said, I love this. I wonder if they're public. While I'm eating, I looked at it. Yes, they are. Kava was the symbol. They are so far superior to Chipotle, right? I mean, it hits my taste buds anyway. I like that kind of Middle Eastern flavor. I bought the stock. I bought some shares in like 30 to 40 range. Nothing major, just to be participating, in the success of the company. Because then I read about it, that they're expanding. And here you go, right? Just by eating there once, and then I eat there all the time now. There are lines out the door every time I go to Kava, right? It proves itself. You don't have to be a genius to figure these things out. Their earnings came out yesterday. Here it is, another, up to 125, right? I mean, at some point I will sell it, but then I don't want to get caught in that 44% long-term capital gains tax rate. I have to figure that out. This is Chipotle. Nothing, right? I mean, see the difference? Okay, this is Coinbase. Again, I mean, broke down, just kind of dead cat bounce. Another one of my favorites I've been talking about, if you guys have been following me, Carvana. Look, I'm a technical trader. I mean, some of you may say, okay, this is garbage company, whatever. It doesn't matter. Picture's worth 1,000 words. I've been talking to you guys about Carvana since it was 80, right about here. That's when the show started. That's when the channel started. Stock goes sideways, earnings come out, it pops, goes sideways, higher highs, higher lows. What is the trend? Trend is your friend. Trend is up. These things, last, right? You don't have to be right every single time. Even if you buy the high, I mean, it's going to be very unlucky for you that you bought the high, right? And that was the ultimate high. And you could have done that in Carvana, right? 3 years ago when it was $400 a share. Then it went down to $5, right? But then when things turn, you guys need to pay attention. There's another one of my favorites, First Solar. It's going sideways. I like these types of setups. Okay, it's going to probably go a little bit more sideways, but when it breaks out about 230, you guys got to be on it, just like the Tesla trade that I gave you guys a while ago. Goldman Sachs, that's Google. Goldman Sachs, right there, right, had a swoon and came right back. Financials will do well if they start cutting rates. This is one thing that I talked to you guys about plenty of times before it actually broke out. This is called, IWM is the ETF for Russell 2000. If this market's going to keep going higher, I think the IWM, the smaller cap stocks, which they do better when the short-term interest rate cuts are coming, which they are. The Powell said that today in September they're going to start cutting. These kind of stocks do really, really well, right? Small cap stocks do well, and that's why IWM, I think, is definitely something for you guys to consider. Because if you look at, I even learned how to do that, people, now. If you look at 3-year chart on IWM, okay, and then go actually further, IWM actually is not even close to making this is a weekly chart of IWM. It's not even close to making an all-time high, right? It's not even close. So, well, if you compare this look to an S&P 500 or a triple Q, you guys will find out how much IWM has room to go. And I think, definitely should be part of your portfolio. Small caps definitely should be. Then MicroStrategy is the Bitcoin surrogate. Talked about this. Michael Saylor, stocks going sideways. Why? Because Bitcoin is going sideways. If you guys look at the Bitcoin chart versus this one, it literally follows back and forth. But this is like a steroid pump, turbocharged version of Bitcoin, right? And another one that's doing well, Netflix, obviously. Look, markets. These are the stocks that you guys want, right? Outperformance is the key. You guys need to figure out performance, and it's pretty easy to figure out. I showed NVIDIA. Everybody's favorite these days is Palantir. Palantir. See, these are the, market's not at an all-time high. The recovery pace, right, when sell-offs happen on outperforming stocks is going to be a lot better. A lot better than pretty much anything else that you guys will touch. Roku has been doing well. It's coming out of the death, right? If you guys look at it, in fact, I'm going to show you one more before Roku. I'm going to show you guys PayPal. I'm going alphabetical. PayPal, look at PayPal's chart, right? Okay, so, these are the types of setups, because if you take PayPal back 2-3 years, you guys will see how much underperformance PayPal was under. Okay, look at this. This is the type of stuff that I'm talking about. You guys see the setup, right? These are the setups that I love. Let me make this chart a little bigger for you guys. Look at that setup, right? A multi-year base. We're talking like we're going back to 22, 21 here. Stock has been going sideways, finally turning around on a long-term basis. You guys need to be watching at least, or trading or buying and holding PayPal. Okay, on every pullback, safer to buy. Stock used to be, I think, over 200 a share. Now we're down to 70. Right. Every company goes through this, and you guys need to be on it. And you guys need to find these long-term basing setups. Okay. And then Roku is another one. Again, look at the base, right? There's this type of base that we're talking about. This thing has been basing since March, April of 2023. It's like a 2 year and a half, right? Now it's breaking above its 50-day and 200-day. These are the things you guys need to pay attention to, right? So PayPal and Roku are my longer-term favorites. Let's see. Well, this is the Serve Robotics that I gave you guys at $2. Okay. I'm trying to buy it. As you guys can see, one other thing I like about it on Thinkorswim is it's just showing me I'm trying to buy like 50 calls. 50 meaning not $50 calls, $10 calls, 50 of them September 20th. I bought a few. The market's not coming back for it to give it to me yet, but I'll probably just splurge and get it. That stock went from 2 to 24 in a matter of a week and a half. Why? Because NVIDIA invested in Serve Robotics. I even interviewed the CEO of Serve Robotics on the other channel, people. Okay, I have no inside information, whoever is watching, but I kind of put two and two together. These little robots are all over the place in LA. See, again, you don't have to do that much research to figure these things out. And then obviously, right, stock goes to 24. At 24, it's worth $1 billion. Well, company's not worth $1 billion, obviously. I actually had ton of stock at 192. I cleaned up at around 8 and a quadruple, and then watch it go to 24, killing myself. That would have been my year, actually. I had 12,000 shares with $1.92 cost. And then I shorted at 19 and then covered at like about 11. So now, I'm going like, okay, this digested, low volume. I think, I don't know if it's going to go back to 24, but I'm pretty sure resistance is about 14 and a half, 15, and then again at 18, reasonable. Another long-term, chart, not as good as PayPal and Roku, but, Shopify, just kind of watching, and then let's talk about the interest rates. What's happening to interest rates, right? So this is TLT. This is the inverse version of interest rates. So when we were down here, so let me put the 1 year one up. 1 year, 1 day. So this is so when this chart's going up, that means interest rates are going down because it's inverse related to interest rates actually. And this is kind of telling you guys the story that the Federal Reserve is definitely going to start cutting interest rates. Another favorite of mine that I showed you guys. And then, that's why my watch list is this long. And I will actually take a screenshot of this, put it on the community page. Another one was Upstart. We talked about this. You guys can go watch the old Power Hours. I started buying the stock at 30 the day earnings came out. Stock is at 42. All right. Trade options, trade stock, do whatever you guys need to do. Again, you see the pattern here? Massive, massive base, good earnings, huge volume, breakout above the 200, above the 50, above the 20. Yeah, these are the setups I like. And then I'm not a day trader. I'm a swing, definitely position trader. And these are the setups you guys need to look at. These are the most powerful setups. If you don't do anything else, just watch stocks that base and then break out. And the last one is going to be Zillow. Again, another one. Not as hot as UPST or Upstart or Affirm or Roku, because those are just started going, right? You can buy those on any pullbacks. But again, the risk reward is pretty low, 3 to 1-ish kind of a thing, or 4 to 1 on these. And,